Good day. Welcome to another monthly summary of our live trading portfolio. Our aim is to show you how our strategies are performing in real time with real results. These are not theoretical backtests or paper strategies. These are real trades running on a live account. In the past period, we have once again confirmed the consistency of our system, and today I will show you not only the current results but also a long-term history since 2010, which provides a solid foundation for our strategies. According to statistics from FX Blue and an article on Quant Monitor, we can say that the portfolio continues to grow. We have had several consecutive months of gains, and August was no exception. The overall result since the launch of the live portfolio is more than positive, and mainly the equity curve is growing steadily without significant fluctuations. Our philosophy is not to hit one big trade, but to build a sustainably long-term portfolio of strategies, and we are succeeding at that. Let's take a closer look at FX Blue. The overall yield reaches 23%, the monthly return is 4.1%, the weekly return is 1%, and the maximum account exposure was 6.6%, with 40% of trades being profitable, and currently we have a profit factor of 1.32. The portfolio averages 1 2/10 trades per day, and we have a total of 153 days of history. The equity curve looks as follows. Here is the distribution of trades. Consistency is important to us, that trades come in regularly without extreme fluctuations. If we look at the analysis of individual instruments, how they have performed, So here we have the equity curve is up for 6 months. Gold performs the best. There are both long and short positions in profit, as gold has exhibited high volatility in recent months. In second place is the DAX index, up 4.4%, followed by the euro-dollar, euro-yen, and dollar-yen currencies. The dollar-yen is slightly down. The Nasdaq index has historically been the biggest driver of the portfolio, but over the last 6 months I've seen a minus 2.5% there, with the Nike index also being one of the largest drivers of the portfolio, but it's actually down 6.4% for that last half-year period. Thanks to this diversification, we are not dependent on a single market if one instrument is underperforming in the short term. The others, as you can see, will balance it out here, the equity curve. Let's take a look at the portfolio analysis since 2010. I have here a view of the statement from Quant Analyzer. I have been conducting long-term analysis since 2010, and I processed it. In Quant Analyzer, we are able to process data from MetaTrader 5 testers from tick tests And it should be emphasized that, I took the data from forex, the broker, only, I took the indexes from futures contract data, not from CFDs.
Beneath an endless night, the world spins around. You're there easy.
So I have indices since 2010 and not just from 2018, where this data is provided by forex and is a bit differently distributed.
When I was shining during the darkest times.
So here in this tester, I see that month 7 is in loss, even though in the end the portfolio showed a profit. So the distribution is a bit different. Well, what do the analyses suggest?
In the glory of the winter sun. Maybe this is the season of love. As the leaves change.
The total profit after. Because I unified the exposure and made larger trades here, it is over $1 million with 28,000 in exposure.
Bask in the glory of the winter sun. Maybe this is
If I put it into proportion, I have a return drawdown ratio of 37 over the years, and 38% of trades are profitable. The profit factor is 1.4. So basically, I made 9% annually, 9.91%, almost 10% annually, with the annual exposure being 2.6%, which is an excellent ratio. Here are the individual components of the portfolio, and here is the overall equity curve. Statistics for individual. In indices, currencies, and gold. And here are the distributions of the largest and smallest trades, average trades, numbers of losses, numbers of gains, and other statistics. Gains by month and losses by month. Gains and losses by year. So overall, we have over 5,700 trades in the analysis since 2010, which is a huge statistical sample. This history covers various phases of the markets, including rises, falls, crises, and periods of extreme volatility. And in all these phases, the strategy has succeeded. What does this imply? Our live trading portfolio is built on solid foundations. Short-term results confirm consistency. Long-term history shows stability and low risk. Diversification among stock indices, currencies, and gold gives us the assurance that we are not dependent on a single market. We have over 15 years of history behind us, thousands of transactions, and stable capital growth. And that is exactly what we want from a quality system. No quick riches, but sustainably long-term results. Thank you for following our monthly summary. If you are interested in more details, please visit our website quantmonitor.net or check the live results on FX Blue. We will see you next month.